Anheuser-Busch InBev is rearranging things so that they can buy SABMiller. Clementine Fletcher is going to join us. She is with Bloomberg.com. And Bloomberg, she's live in London. Clementine Fletcher, welcome to St. Louis and welcome to Big 550 KTRS.
Good morning, McGraw. How are you?
I'm great. Thanks for calling in and thanks for checking in. It's almost, this is unbelievable. This is like the Yankees buying the Mets or, Pepsi buying Coke, right? If this were to happen, this would be a gigantic story, wouldn't it?
It would be huge. As you noted in the story that we covered before, we're looking at a deal that is probably upwards of $120 billion. Obviously, the last really big deal they did was one probably remembered well by your listeners back in 2008 when InBev bought Anheuser-Busch, and that was for less than half that at $52 billion.
Let's go back. ABinBev buys Anheuser-Busch. From all accounts, that was a successful purchase, and has ABinBev paid off all that debt?
Yeah, they're now down to a sensible level of debt. Even though they've bought bits and pieces all over the place, they say that they're going to be at about 2 times net debt to EBITDA, a measure of kind of their gearing by the end of 2014, the beginning of 2015.
So they've paid it off, if you will, and now they're looking for something else? Or
Sure. The rationale behind this story is if you look at ABinBev as a company, it's been formed by a series of acquisitions. And this isn't unusual in the beer trade. If you look at SABMiller, the same thing has happened. It's companies buying other small companies, consolidating. ABinBev has done this on quite a large scale. So one of the reasons that the ABinBev, the SAB story will always come up is because they've proven themselves to be very effective at doing M&A.
Yeah, they also borrowed that $52 billion when the rest of the world was imploding. So the fact that they were able to get the money and then pay it off must mean that the financiers around the world have a pretty good feeling about ABinBev.
Well, of course. My sources say about this company is that they're very trusted. You can't kind of underestimate the amount of cash that comes off beer companies. They're very cash generative. They can pay down debt really quite quickly and quite easily. And ABinBev operates in very cash generative markets. The U.S., for example, extremely profitable.
There's no more people drinking beer, right? There's no more growth, and it isn't like cell phones where, all of a sudden people are having cell phones today that didn't have cell phones 5 years ago. The beer market is saturated, right? So they're buying their growth. There's no way to grow their own business, correct?
There are ways to grow their own business. There are 2 parts to this question. The one thing that they're doing at the moment is they're kind of stretching out their portfolio. So they're not just selling Bud Light. They're focusing on cheaper brands. They're focusing on more expensive brands. In the U.S. market in particular, premium is where things are growing. It's being helped by craft. The second part is, so they're growing themselves that way, and if you look at their results, that's something they are doing, even in a market that's declining in the U.S. The second part of it is that if you look at emerging markets, which is where SABMiller is strong, that's one of the rationales behind this deal, that ABinBev might want to buy SABMiller because SAB is really prevalent in really fast-growing markets like in Asia. Obviously, they bought into Foster's. They're big in Southeast Asia, as well as in Africa, and also the rest of Latin America, where ABinBev just does not have a footprint.
Yeah. ABinBev, rumors are, wants to buy SABMiller. Why doesn't SABMiller want to buy ABinBev?
If you look at the market capitalizations of both of them, I think it would be a bit of a stretch for SAB to do it. Looking at my figures in front of me at the moment, ABinBev has a market cap of about $167 billion. SAB is just over half of that. It couldn't work the other way around, unfortunately.
Right. What are the odds of this happening?
Well, I think one of the things that you have to remember about this deal is it's been rumored for a very long time. In some ways, it's an ideal fit. They'd have to sell 2 parts of the business if they did it. They'd have to sell the U.S. for SABMiller because Anheuser-Busch competes directly with Miller Coors there, which is part owned by SABMiller, and in China as well. So that could be something that could sort of dilute the value that you get off this deal. But the rest of it, they don't really have an overlap. So when analysts and investors look at the next thing that they think that AB InBev would do, then this seems to make strategic sense.
So
they would been around for a long time, this rumor.
Yeah, no, it's right, and it seems to pop up every once in a while. But the fact that you're writing about it, Clementine Fletcher from Bloomberg, not to out you, but the fact that you're writing about it and you put so much resources behind it has got to mean that somebody's talking somewhere and somebody's trying to loosen up somebody or somebody's trying to make noise about this somewhere.
People are talking every day. I mean, there are two very obvious factors that are entirely public about this. The first thing is that AB InBev has said that they'll pay down debt, as we discussed earlier. And, most beer companies don't want to have less than 2 times net debt to EBITDA. It's not an effective use of cash. The second thing, and, in the past they've done deals when they get to this stage. The second thing is that SABMiller, which is a well-rated stock, is currently not on such kind of valuation highs because, as you're aware, there's been kind of questions about emerging markets that are slightly roiling currencies, roiling companies that have large exposure to them. They're slightly cheaper than they used to be.
Yeah. Clementine Fletcher with us from Bloomberg. How big is too big? And what I mean by that is in America, the craft market is exploding. And it's almost like that rock group that becomes popular. Nobody likes them anymore because they become popular. So if AB InBev buys a craft brewery, don't they lose that panache because they're not a small little craft brewery anymore?
Sure. Well, there's an interesting story behind this. When I spoke to Anheuser-Busch about this back in November, one thing they did say is that craft beer, and what craft brewers always say is that people, like craft, they don't want to have a beer that is owned by a big brewery. They want to know the name of the guy who made their beer. They want to be able to drive down and buy it there.
Right.
One thing they did say, and obviously this is something that they would say, is that actually there's a large percentage of people in the middle who like the taste of a craft beer, but don't necessarily need it to be like that. They like the fact it looks crafty. They like the fact it tastes crafty. But they don't necessarily need it to be made by a small brewery. They're quite happy if it comes from SAB or from AB InBev. And that's what they're doing with brews like Goose Island, which has been doing incredibly well recently. Yeah,
Goose Island and Shock Top and some of the other ones. What is SABMiller saying, and or are they saying anything?
Well, you'll note in the article that we put out yesterday that SABMiller's CEO, Alan Clark, commented on this to my colleague Dwayne on the sidelines of a conference recently. He said a case could be made for the acquisition of SAB by AB InBev. He didn't say whether it was likely or not. He just kind of stated the fact that, yes, these numbers could work.
What is going to happen? Read the tea leaves for us, Clementine. Going forward, what are you going to be looking for to see if their deal is imminent?
Well, it depends. Firstly, if they announce something like this.
Sure.
Secondly, one thing that AB InBev has said is when they pay down their debt, they will start buying back shares or increasing their dividends or doing extraordinary dividends to their shareholders. So if we see them doing that, it's like slightly signals that it's not likely. Obviously, SABMiller could go out and buy something else in the market that perhaps increases their level of net debt, which makes an acquisition slightly harder. Perhaps there'll be a re-rating of how investors see emerging markets, which then puts SAB's share price up again. I'd love to be able to be the person who makes the predictions here, but I'm not the people running those companies. Yeah,
interesting stuff. Clementine Fletcher, Bloomberg.com writer, has got an unbelievable story about the rumors that are flying, but she breaks it down. What would it look like? AB InBev and an SABMiller mega deal would rewrite the way beer is made, brewed, and drank here in the country. What happens, Clementine? So if this happens, they have to sell Coors and Miller. So in America, Anheuser-Busch, Budweiser, Coors, and Miller would still remain bitter enemies, I guess, right?
Sure. The way that the structure worked is you have AB InBev, which has kind of about half of the market, And then you have Miller Coors, which has the other half of the market. Miller Coors is a joint venture between SABMiller and Molson Coors, obviously, which is another well-known company. If the deal were to go ahead, analysts say that SAB would probably sell their 50% back to Molson Coors. So you'd still have those brands in the market. They just wouldn't be operated by SABMiller, or if indeed the deal happened, by AB InBev.
Yeah, interesting stuff. Clementine Fletcher with Bloomberg and Bloomberg.com. We will tweet out the article so people get a chance to see it. Clementine, thank you very much for your time. I know it's a busy day for you. Thanks.
A pleasure speaking to you. Bye.
You got 9:21 here, Big 550 KT.